I've also seen people who are like, no, me, only my husband knows this. And there are actually men who also say, no, my wife is the financial manager. Me, I don't know these things. No, know them for the sake of the fact that you don't know what will come tomorrow, and you may be the only guardian left for maybe your children. So anyone can learn. Don't think, oh, because I'm a woman or because I'm a married man, so my wife will learn. So things like that.
A lecturer of mine who was talking about growing up, they only used to eat rice with chicken on Christmas. So when he got his degree and he started making his money,
he was like, chicken.
He told his wife, every day I want rice with chicken. Because why was I waiting the whole year? So some people also do that with their money. If you felt lack in a certain area all your life and now that thing is abundant, it may shape how you now function or how your relationship with money is today, but you may not realize it. Before I began to research and to do my own personal finance, people thought because I studied accounting and I know how to handle my money. A lot of accountants don't know how to handle their money.
I can attest because I've seen people come to me and say, we learned certain things in school, I don't even remember everything. I'm like,
Hello and welcome to the Money and People podcast, the show that connects the dots between financial success and the power of human capital. Today, we are joined by Chipepo Phiri, who is a financial literacy educator. And we're going to be discussing money mindset and investing for beginners. Welcome to the show, Chipepo.
Thank you, Delia. Thank you so much for having me. I'm excited.
Thank you for coming on the show and for agreeing to share your knowledge and wisdom. So for those people who don't know about you, I know about you because I follow your page, Finances with Chipepo. But for those who are seeing you for the first time, who is Chipepo?
Okay. Well, Chipepo is this bubbly person that you've probably come across on Finances with Chipepo, for those that may already know me. And if you haven't, I go by Finances with Chipepo because I share personal finance from my lens. Like initially, the personal finance blog started by me just documenting my everyday thoughts about money, everyday experiences. I still do that, but I coupled it with a lot of education because people would like start asking me questions. But away from that, I'm actually a biologist.
Okay.
I studied biology, and during the period of studying, I started learning about money through obviously experiences that hammered me, and but I started learning about money in 2017 and sharing in my circles, and then in 2020, I was like, you know what? My friends will leave me. Like, this weirdo. We want to talk about other things too. So I took it to the internet, and that's where we are now. I'm also Mrs. Mwamba.
Okay.
So basically, those are the few things about me
Okay.
that I can say.
So you said you studied
biology.
biology.
So biodiversity and environment, and even the job I had, I worked in like food and nutrition sector. Some people are like, how do this converge? I'm like, no, we all have like passions outside like our work or the things that we studied for, like our professional careers and all that. And for me, I just decided to like publicly share my like the things I'm interested in, even though they don't converge. But
so you're using past tense, so you're no longer doing the work that's linked to what you studied.
I ran away.
Okay.
No, I quit. After working for about 3 years, I quit, and I just wanted to explore other things, like things I would like to like try out. I wouldn't even say entrepreneurship per se, because at that time I was just like, I don't know if I want to take this personal finance blog to another level, or I want to explore other passions and see what I really want to do.
Okay. So for those who don't know Finances with Chipepo, what exactly do you do?
Okay, so for someone who doesn't know, it's like I said, a financial literacy blog. And there I share about my spending patterns, how you can observe your spending patterns. Are you intentional? Are you being impulsive? I talk about budgeting. I share my wins, my, I don't even call them losses, but the
Yeah,
laws
lessons.
of like
Yeah.
personal finance. Yeah. Saving, something that I've noticed that for people who followed me maybe like end of 2024 and in 2025, you notice I've talked a lot about savings because I saw that as things started changing with like the whole inflation, and I think in our case in Zambia, load shedding and all that, people are being hammered left, right, center. Like you need a gas stove, you don't have any money. So
Yeah.
like I started talking a lot about saving, and I also talk about investing. It's actually something that even allowed me to quit my job after only working for 3 years. So those are some of the things I really just share about. So I can say it's holistic sort of. And I
Yeah.
love talking about money mindsets because I know that for you to even start to learn about all those things or even adopt what you're learning, a lot of it has to come from how you view money, what you've learned about it growing up, habits you've picked up, and so on and so forth. Yeah.
Okay. I'm still stuck on you mentioning that what triggered this interest was experiences that hammered you. What are you talking about exactly? I'm trying to move past it, but I
Yeah.
keep like something
Yeah.
is
I got
nudging
hammered.
me. What happened?
Okay, maybe it sounded very alarming, but it was just I was on a scholarship. We received enough money, honestly, to live on. So we'd receive the money for like when you receive it, it's supposed to take you for like 4 months, although sometimes it would be late and the like. But we were in this pattern as students where when you receive the money, you spend, spend, spend. You
Yeah.
run out before the next stipend. Now start like asking from parents and what, and some people didn't even have that really. And it, when people who work say injury week, it's like
Yes.
injury months. As a student, you're like, I'm in
Really?
school, I'm broke. Some people would even fail to now start like go to school because they don't even have transport money.
Oh, wow.
But in my case, the like that moment was when I had used up my rent money, and unfortunately I shared this on the platform, but like I had argued with my landlord a month or two before,
Oh,
so we're
no.
not in good terms, and I was like, oh no, this is not the time to even say wait, I'll give you when I have money. So I had to ask for money from my friends, and for me that was a law in the sense that if I learned something from home, it was only one thing: to live within my means. And
Yeah.
the way I understood living within my means was that if I'm given $1,000 or for 5 months, if I finish the $1,000 and I just sit and eat my potatoes and rice, I've
Mm-hmm.
lived within my means.
Yeah.
So, like, even if I run out and I remain with nothing, but
Yes.
I didn't go. So now that moment where I needed to ask for money, like I had to go outside of the money I had and ask from friends, then I realized, oh, I lived
Outside.
way, like now I can't even pay for rent. Yeah. So after that, I said something has to give because mom won't be happy if she finds out I'm now like getting into debt to just pay my rent. And yeah, that's when I now went ham on the internet trying to like look for information on how, like, when you receive money, how can you keep it until the next money
Yes.
comes? Like, if I save, how can I make sure I don't go and dip into it? Because I had attempted saving before, but what would happen is that if I saved up for something, I would just like spend everything and then the account goes to zero.
Yes.
Or if the thing didn't happen, I'll just get the money, go to KFC, whatever. I don't remember if I'm advertising them, but anyway, yeah, like
Yes.
I'll just go to different places, spend, buy clothes, what, because, well, the money is there and then go to zero again. So yeah, that was
Okay.
the small moment.
So you taught yourself what you knew about handling your finances, and then you decided to teach other people.
I would say yes and no.
Okay.
So yes, in the sense that yes, I taught myself, self-taught in that I would go looking for the information. Like no one really came to me. I like stumbled upon blogs, YouTube channels, and all that. And then in my immediate circle, the first thing I did is I told them when we receive money this time, all of
Mm,
us are opening savings accounts. So that's the
okay.
first thing we did, like just the people really close. And then like every time we'd meet, I would throw in like, this is what I learned, this is what I learned.
Yeah.
And when I started sharing online, I wasn't sharing to teach. It was
Oh,
like a
okay.
diary. Like to me, it was
Yeah.
like, this is my personal finance diary. Actually, at the time I was doing that, I wasn't even working. I was job hunting. I was just like, I'm home, I'm not doing anything. But then I'm like, I've learned all these things. What if I forget them? So now I just
Mm-hmm.
started posting like budgeting is this, saving is that.
Mm.
And with time, people started asking me, can you tell me more about this?
Mm.
I'm like, oh my God, I started explaining this whole thing. Please
Yes.
teach me this. And I know that for me, it's been like years of learning because you can imagine from 2017 to like 2020, 2021. So now people would, even some of them would come and be like, can you please teach me? I will pay. I'm like, oh,
Mm.
okay. But I thought maybe it would take away the fun in like, yeah,
Yes.
like if I start charging and what. But with time, I realized that if I said I'm going to stop sharing, then again, I'm limiting those people who found me and they were like, I'm so happy to find a Zambian sharing about
Yeah.
this. Because
Yeah.
even for myself, I started also partly because of that. I was following Americans, Europeans, and they would share everything to the T. And I found that there was no Zambian who was mentioning like actual numbers. They
Yeah.
would give like theory, examples. But me,
Yeah.
I was like, no, I have this 50. This is how I'm spending my 50. So I thought, well, it would be cool, I think, if people can stumble upon a Zambian blogger who's actually sharing real numbers. Even when I was working, I would share what I was earning, how I was spending it, how much I invested. Like, I've been open in that sense. So yeah, so I didn't decide to like, yeah, but then
Yes,
it's
it
like
just
people
happened. Yeah.
decided and it just happened. Yeah.
Okay, that makes a lot of sense. And I mean, well done on identifying that gap. I mean, it was the same with us with this show,
Yeah.
is you find so much information, so many resources, but some of it you can't relate because someone is talking to
Exactly.
you in dollar terms
Mm-hmm.
and you look at that economy is so different from ours.
Tell me about it.
You look at they're talking to you about certain investment opportunities that are not available in this landscape. So to just bring certain conversations home to the Zambian setup is always a refreshing thing. It
Yes,
makes it relatable.
very much.
And coming to the part where you did your own research, it just then goes to show that anyone, it doesn't mean you have to have studied business or
No,
finance
not at
for you
all.
to learn how to manage your finances better.
Yeah.
Because what I found is before I began to research
Yeah.
and to do my own personal finance, people thought because I studied accounting, then
Yeah.
I know how to handle my money.
Yeah.
A lot of accountants don't know how to handle their money.
I can attest because I've seen people come to me and say, yeah, we learned
Yeah.
certain things in school. I don't even remember anything. I'm like, yeah.
Yes,
Mm-hmm.
because people have this assumption that you need to have studied something related to
Yeah,
finances for you to know how to manage your money. But
exactly.
anyone who can invest in learning for themselves, I believe, can learn
Yeah,
something.
that's very true.
Yeah,
Like, totally.
yeah.
Mm-hmm.
And so if you weren't doing what you're doing now, what would you have been doing? Obviously,
Mm-hmm.
not the biology.
No, no, no. Yeah, yeah,
Yes, but is
yeah.
there any other career path that you would have taken?
Okay, so since she said not the biology, let me just say something. I worked in fisheries and aquaculture, like specifically under nutrition and the like. So like something else that I'm passionate about is like the biodiversity part. I tried to apply for jobs, I didn't get any. So I would actually like get into something like that.
Okay.
But aside that, I actually love travel, but then I love to experience wineries and just wine itself. So if I wasn't doing these two things, I would become a wine connoisseur and just like really go around the world studying different wines, how they're brewed and documenting that. I think that would be really fun. But
Okay.
also there's this thing I have. I even have a name for it. I'll start it later, maybe when I'm 40 or I don't know, maybe 35. Art. I think we pay a lot of attention to like big artists, like
Yeah.
yeah, but I would like to document or have a space where like the just smaller artists or the upcoming artists can bring their work and we can do exhibitions. I That's something I'm very, I don't talk about it, but it's like goes through my mind like every
Yeah.
day or every week. I think it's pretty cool. Yeah.
Interesting. And I'm
Hmm.
sure that would be a very nice art show because
It will
sometimes
be.
we need to just smoke out some of the less talked about talent
Yeah,
that's out
yeah.
there. There's a lot of it.
Yeah, there are people in these Tuma compounds and what who like their families know and what, but then they're not even making money from
Yeah.
it because of maybe where they are or the opportunities they can have access to. So I
Yes.
think I would like to like go and dig deep there and find them. Yeah.
Interesting stuff.
Yeah.
And what's the best piece of financial advice that you've ever received?
Okay, so best piece of financial advice I've ever received. Honestly, I think I find it hard to narrow down things,
Yeah.
but running away from like consumer date, I would say it's one of them because right one it hits home for me because in my own family I've seen what debt can do, like when you can't pay it off. But worse off now that I share about personal finance, it's something that I even had to drop from the services I was offering on a one-on-one basis because it drained me. Like when you are
Yeah.
dealing with someone who's dealing with debts,
Date.
like it's crippled them and they're really just trying to come up for air. So
Yeah.
really running away from that, like running away from consumer dates, that's like the best. And I learned it luckily when I just started learning about money. For me, the person who stood out, who taught in a way that I would understand, I don't know if I can mention them.
Yes, please.
Yeah, so it was Dave Ramsey, and I
And
remember.
that's the name that rang up in my head
Yeah.
because the way he talks about it, you don't
Yeah,
want to be listening if you're
exactly. And
guilty of
yeah,
having date.
exactly. Like the video, it's a 30 minutes video, and like they depict the gazelle running away from, I don't know if it's a cheetah or something, and
Yeah.
it's like ran like that. And really, right now, I've seen that there are people who be like, oh, but this billionaire says debt is good, leverage what? I'm like, how you're talking about
Yes.
leverage? You don't even have two kwacha in your account.
Right?
No,
Those
you
guys
should
have
be running
assets.
away from
Yes.
debt. Like there's a level at which you can understand debt, use it to your advantage, but
Yeah.
most people go into it prematurely before they really understand the dynamics of their money management and all that. And then they spend like 20 years in a cycle of just you earn, you're paying, and interest keeps increasing that. So yeah, I'm so glad that I learned about that, and yeah, I have a healthy relationship with debt.
Okay. That's good. Speaking of healthy relationships, what do you think having a healthy money mindset means?
Okay, that's a good one. I think having a healthy money mindset, for starters, is even just being comfortable to have money conversations.
Yeah.
For some people, they may think, oh, the barrier is in how can I learn to save? How can I learn to invest? But the starting points are being comfortable to sit down, even listen to something about money. There are people who just be like, what should someone teach me how to handle my money? It's my money. But like,
Yes.
why are you saying that exactly? Because there are so many things that people teach us to do, and we accept them, and some of them are very funny. If we check our search history on YouTube, the things that we go for, like
Yes.
on TikTok, how do I open this or whatever. But
Yes.
then money, which is like a very big part of our lives, in anything that we do, there is like money involved. So why wouldn't you want someone to teach you? So
Mm.
a healthy relationship really will stem from you being comfortable to talk about money, you
Yeah.
being comfortable to know that you can learn about money management. Like you don't have to be, I can't say big headed, but I've said it, but you don't have to feel like you
Yes.
know everything just
Yes.
because you're able to earn. If
Yeah.
anything, in most cases, the earning and the spending are the easiest,
Yeah.
because even if you're not earning to the extent you want, all of us welcome money in a way, whether I gift you daily, whether it's an allowance, it like in so many different ways. But then also spending, no one really gets to teach us to spend. It's like
Yeah.
even if you identify as maybe a saver, you still spend, right?
Yeah.
Like we're just natural spenders, all of us, only that
Yes.
others go the extra step. But then, excuse me, but then when you look at it, understanding the gaps as well, like what are the different ways that one can spend, how can I save and the like, that is now you entering the place of having a healthy money mindset, because you are comfortable learning about money holistically, not just in one way. Also identifying where you're coming from, because how you are brought up, the environments that you've grown in or that you're found in will also influence you. So sitting down to reflect, okay, do my spending patterns like, are they just coming from me, or it's because mom never wanted to spend and now I feel like
Yeah.
I always have to spend money, or because they spend so much money at home and would run out and now I have fear of like spending a lot. Like you have money, and there are people who hoard
Yeah.
money. They're
Yeah.
scared of even saving it or investing it. They just keep it in their current account.
Wow.
So that also means that there's something in the mindset, right? And I
Yeah.
always say that with such, you actually have to consult maybe a therapist, a counselor. It could be at your workplace, at church, or anywhere that you have someone who can guide you to unlock or talk about some of those things that can break the barrier between you and having the healthy money mindset. I hope that answered your question.
Yeah, it did, and it covered so many different aspects. And as you are talking, and I think that's why it's important to read certain books like The
Yeah.
Psychology of Money, because
Yeah.
we see things on the surface level, but like you
True.
have stated, sometimes our background plays a part in some of the financial decisions that we make, even if they're small.
Yeah.
I mean, there was recently a lecturer of mine who was talking about growing up, they only used to eat rice with chicken on Christmas.
Ooh,
So
the whole
when he
year.
got his degree
Uh-huh.
and he started making his money,
He was like
he
chicken.
told his wife, every day I want rice with chicken.
Uh-huh.
Because why was I waiting the whole
Oh.
year? So some people also do that with their money.
Mm-hmm.
It's if you felt lack in a certain area all your life and now that thing is abundant,
Yeah.
it may shape how you now function or how your relationship with money is today, but you may
Yeah.
not realize it.
Exactly.
Some people are just like shopaholics or impulsive spenders, and they don't know where that is coming from. But maybe
Yeah.
there was something they
A
were always
moment.
lacking, and now when they're in the mall, they just
Yeah.
have to get that thing.
Yep. That reminds me of something actually.
Yeah.
When I was in university, the same time I started learning about money.
Mm-hmm.
Before that, I would like buy clothes and just have them with tags. Certain
Yeah.
clothes I would just have them with tags. I would buy shoes that I didn't even really like or
Yeah.
wouldn't want to wear. And when I was learning about money, I also came up, like I stumbled on minimalism, and I
Yes.
was like looking at my things. And one thing that stood out was when they said, "Look around you. Everything you see was once money." We can actually do that right now, even as we are sitting.
Yes.
Like the
Yeah.
thing you're holding, what you're wearing was once money, and then now
Yeah.
it became like you exchanged it for this resource
Yeah.
that you have. And now I was going through my closet. I'm like, these things. Like I was calculating those that I could remember, and I said,
Yes.
no, this is not right. But then I asked myself, like, why did I become this person? And I remembered the time in high school when I had one pair of shoes.
Yeah.
Like I
And
had
you
one pair.
managed.
Yeah, but then again, in that moment, I wanted more shoes, and I asked, and I wasn't given the money. So when I was at the
Yes.
point where now I had the money, I said I'm going to buy shoes, even
Yes.
if I need them or not, because there was a time. So now I'm going to
Yes.
cover up. Then I said no, I don't need that. I can have a number, like I can have just a good number of pairs that I wear, that I like, that are useful. Like I don't have to
Yeah.
prove to anyone. Yeah.
Yeah, that makes a lot of sense. And so, do you think that your mindset will affect your financial success,
For
whether you're like
sure.
a business person?
For sure. Definitely.
Yeah.
I believe it 100. Obviously, also, you could have a mindset, but if you're not acting on it,
Yes.
it's a bit different. But, like, yeah, your mindset and what you're doing that is influenced by your mindset. So, yeah,
So
definitely.
it's not just mindset because sometimes, I mean, everyone knows saving is
Yeah.
important, investing
Mm-hmm.
is important,
Yeah.
but not everyone
Does
does.
it. Yeah. Like
Okay.
they will not take action on it because now they are allowing their mindset to stop them. I think it's like almost any other habit that we are used to and we're trying to break it. In the mind, you still want to do the thing that you're used to, but then you will try by all means to overpower that thing that's in your mind so that you go against it. So, yeah.
Yeah. And what role do you think financial education plays with building that confidence to deal with money?
Ah, I love that. Because one thing that people actually don't want to do, some know they don't want to do it, others don't know,
Mm.
learning.
Yeah.
Sounds simple, but people will come to me and just say, how much will I get if I invest in this? I'm like, that's your concern. You don't want to understand how it works. Like, you don't want to understand the pros and
Yeah.
cons. You don't want to even know the definition. Like, okay,
Wow.
because people are just, one, some are scared of learning, others are just not interested in learning,
Yeah.
and then others don't even know that the first step should be learning. So
Yes.
when you understand something, you will now be able to make an informed decision.
Yeah.
if you don't know something, it's easy to pick it or not even pick it, which is even like, I don't know if it's worse when you like don't
Yeah.
get into something because you just never
You
knew
don't know.
about it.
Yes.
Yeah, so like financial literacy covers or closes that gap because people are now understanding, oh, so this is what a rainy day fund is. Oh, so this is how these investments work. Okay, you know what? I think they don't align with me. You are making an informed
Yes.
decision. Let me now go and research on
Yeah.
other things.
Yeah.
But if you don't go that extra mile, you just be, no, me, I don't do that. I will not put my money in that. But you don't get
Yes.
it. So you are maybe missing out just for lack of knowledge.
Yeah.
And financial literacy does that. It will
Yeah.
help you understand things. Yeah.
And I mean, I agree with the confidence part because look, these days you find people just hearing, oh, people are investing in bonds. Even you decide to invest in bonds.
Exactly.
And funny thing is now there are people who are coming on the internet to
Yeah.
say, bonds are not profitable
Yeah.
because the interest rate is this, the interest rate is that. You yourself, if you don't know how to do that analysis for
Yeah.
yourself, you will just be following this side. Today they're saying bonds, you go.
Exactly.
Tomorrow they say it's not profitable, you decide it's not
Yeah.
profitable because you don't even understand how certain investments work.
Yeah.
So I think people really need to get that financial education for
Very
them to
much.
really have that confidence. Because for most people, it's just, okay, what profit will it give me?
Yeah.
I have this amount. Can I put it in this? What profit will it give me? It will only give me 2%. Okay.
Yeah, and if I give you like a high percentage worse off, now you'll be
Yes.
excited and you'll be pumping in money. Then now later
Yes.
on I come and tell you, oh, so the risk means you might even lose your initial capital. Now you're
Yes.
there crying. But if you
Yes.
knew all that, you would know how you would fit it into your portfolio or whatever, or not
Mm-hmm.
even get into it. Yeah.
At all,
Yeah.
yeah. I agree. So I think to our audience, the lesson here is that you need to make that investment to do the learning for yourself,
Yeah.
you know. And if you want to learn more about how you can invest and all these things, you can follow Finances with Chipepo. And to continue having exposure to conversations like this one, remember to like and subscribe to our YouTube channel. So back to the conversation, Chipepo. What are some common misconceptions that people have about investing?
Okay. When I hear this question, I'm always like, oh, there are so many. But yeah, I think one of them would be that investing is hard.
Yeah.
Like people think investing is hard, and I always say that because sometimes you've come across a set, like you gave an example of government bonds. So I personally share about securities. So I talk about stocks, I share about government bonds and like unit trusts for educational purposes, actually, not advisory.
Yeah.
And sometimes people are just like, oh, this is hard or something like that. And I say, no, you could actually just invest in your skills.
Yes.
Like that could be the first thing that you could do. Like you don't have to think so hard about it, or it could be a business. So one, you need to broaden your ideas of investing. When you hear the word investing, don't limit it to four things or three things that you search people share about. No, that's for me. Those are the things I've researched that I've seen are working for me at this point. If you come to me 5 years from now, I'll have more things in my portfolio, and maybe at that point I'll be talking more about that. But it doesn't mean that I'm not considering other things or I'm not researching on them. So excuse me, that's one of them. Can you even do the
Yes.
question? Okay,
So we are
just so I
looking at
add
the
to it.
misconceptions.
Yeah,
Yeah.
yeah. So that's one of them. Like don't limit the number of things, and then and don't think investing is
It's
hard.
hard.
And then the other one is age. Some people think they are either too young or too old to invest. And I personally say it doesn't go with numbers. But of course, if you are creating your portfolio and you went to maybe an investment advisor, they would say, okay, how old are you? What are your goals? Okay, so this is how we're going to create your portfolio so that you can retire with this amount that you want, so that you're able to take your children for university and whatever. But let's say I'm 76 and I have an income. I can still start investing. Maybe not for my retirement because I'm already in
Already
retirement
retired.
in a
Yeah.
way, but I still have an income. I could invest for my next generation, my grandchildren. What do I
Yeah.
want to leave them? And also, if anything, at this age, at 76, if I had a health problem, maybe I want to target an investment that wouldn't burden my family to be paying for my
Yes.
medication,
Yeah.
but they would be able to pay for it because of the money that I've invested. Now, yeah,
Yeah.
maybe you're 20 years old. we'll tell you, oh, you're very young, you can take up more risk. So we will maybe tell you, okay, these are some of the investments you can research about. And for you, you're looking at, oh, maybe you want to get into a different phase of your career or start entrepreneurship or whatever at 30, because you have like 10 years. So at any age you can invest. What will determine what you will invest in will be your age, your goals, your preference, like risk, or even just lock-in period. There are people who, when they invest, they want to know, when will I get my money? Is it going to come back? Or will I be getting an income from it? Or will I be expecting the value of that investment to go up? All that will matter. If me, I want to get an income, I shouldn't put my money in something that will lock up that money and maybe I only get a return in 5 years. Because my goal is that I need some income. So meaning I should research in the other direction. So that's the other one. Age as well as what I mentioned. Other misconceptions could be like gender. Like some, maybe people are scared. I've heard or I've read even things like, oh, men are better investors and the like. But the more I've been in this space, I have seen that, to be honest, I believe that's a myth. So it's a misconception. Because when you learn something, you understand it and you can invest in it. So, and I've also seen like a lot of women investing actually. So I think anyone, as long as you're a person, you can read and understand, anyone can be a good investor. Don't limit yourself. And I've also seen people who are like, no, me, only my husband knows this. And there are actually men who also say, no, my wife is the financial manager. Me, I don't know these things. No, know them for the sake of the fact that you don't know what will come tomorrow, and you may be the only guardian left for maybe your children. So if one goes, then you remain there. You don't even understand.
Clueless.
You don't know where your portfolios are, if you had investments. So anyone can learn. Don't think, oh, because I'm a woman or because I'm a married man, so my wife will learn. So things like that. That's another misconception. Yeah, maybe you can also give us one that you've heard of.
Well, I think if I do remember some, I will mention them along the way. But you've about covered most of the majority of them, because most people think it's hard. Yeah. So that's what also frames most of the other misconceptions, because now they're scared. Now they are thinking, how will I learn this thing? Now they are thinking, I need a lot of money. Which brings me to my next question. Like, for a beginner who's just new to the game, how do you suggest is the best way for them to begin investing, especially with like what people would call little money? Because sometimes people will be like, oh, I have a 2,000, for example. What would you recommend to be an approach for a beginner?
Lovely. Actually, it also ties into our previous equation. So really, the other misconception is that to invest, you need to be a millionaire, you need to be wealthy, you need to have excess money, you need to have idle money. The list goes on. But to invest, you just need to be sold on something. Someone asked me, like, what does that mean? Being sold on something just means that you've understood it well enough to be willing to, whether it's betting in it, and I don't use the word in the other way. I just mean like whatever we do in life, even when you go to school for your career, it's a bet. Yeah, like this career should be able to yield me the life that I want, or the growth that I foresee, or it should be able to make me happy in the work that I contribute to the world. So yeah, in that sense. So when it comes to investing little money, as we can say, you can first, let me say, yes, you can invest any amounts, really small amounts. So let's debunk that. You don't need to be a millionaire. Actually, investing is what has made a lot of people become rich, especially people who just have normal incomes. Because how many millionaires are there? How many billionaires? But like the people who are just in a normal career, they've become rich because of investing. So you gave an example of 2,000, and I'm here thinking that's actually a lot of money. Yes. So one, you need to find out the minimums. People are scared. There are people who tell me, Chipepo, I didn't want to know how much you can invest in bonds, because I just knew that my money wouldn't be able to afford me that. I'm like, it's just 1,000. The minimum is 1,000 kwacha. No, but I've heard unless you have 100,000. I'm like, oh, okay. Good point, because some people, it's preference. Delia, you could tell me you understand bonds or whatever it is, or an investment, but you would rather, or a business, but you would rather start with 100,000. It's because you probably maybe have the privilege of starting with 100,000. But that shouldn't make the person think, the one with 1,000 think, oh, I shouldn't start. No, because the same 1,000s will compound, or when you continue to add them up, you can get to 100,000. 100,000 wasn't born from nothing, right?
Yeah,
it's
definitely
a ladder. So the first thing is that you need to research the minimums. Be brave enough. Don't exclude yourself from things because of what you've heard. Go and hear it from, I don't know, they say the horse's mouth. Yeah, like if it's Bank of Zambia, go and ask them what's the minimum. If it's Lusaka Securities Exchange, go and find out what's the minimum. So that's one. Then two, you need to now understand the concept of money adding up or money accumulating. So when you're thinking, I have little money, are you saying you have little money forever? So why not start with what you have now? And as you continue increasing your, I'll say your active income, you can continue to now invest bigger amounts. So, for example, with I don't know if I can go slightly in depth on like Luce, an example there. They have an app, and with the app, you're able to invest in public companies that we have in Zambia that are on the stock market. You're able to invest even below 100 kwacha. And if that person is thinking, oh, but I only buy 4 or 5 shares, they're limiting themselves to what they have today. Because when they have 1,000, they should be able to now start investing 1,000. When they have 100,000, they should be able to do that. And if you're thinking, oh, but you're weighing two options, I would rather put in this thing, I say it's not all in. We've also seen people in businesses fail. So you need to also evaluate that. Like if I was putting, even if it's just, let's say, 10% of my income in this other thing, it means that I'm also diversifying where my money is and where my money can grow. But at the end of the day, it comes back to also having your plan. But one thing I'll just end by on this part is saying that with a 2,000 kwacha, you are able to invest in everything that I personally talk about. You can be contributing to a unit trust. I'll give an example. My mom, right now we have a sister who will be going to university next year. And she's been contributing to a unit trust fund from the time that my young sister was very young. And she's saying, I'm so relieved because that money will help me. So now when you look back, I always tell people, think about it now, like 10 years ago. Would you regret having had been putting a 200 kwacha in unit trust? Would you rather say, I should have just sat and waited for 10 years or 20 years until I have 100,000? No. But when you look back, you even wish you were putting aside 100 kwacha every month in something that is earning you maybe 20% interest or even 15%, better than someone who didn't do it at all. So yeah, you can still invest with little money.
I think that makes a lot of sense. And I think what people need to also manage is their expectations.
Yes, please. Preach.
I think when we talk about like, oh, I want to put in 1,000. So by next month, how much will it have made? Like, what do you mean? So this takes me to my next question is, for those who don't know, what's the difference between saving and investing?
Okay. So I'll even add to that, like if you're considering percentages, for example, the example you're giving for 1,000, if someone invested 1,000,000 and I invested 1,000 and they told us, oh, you're all going to earn 10% on your money, is it greed that will make me think I should have earned what the person with 1,000,000 earned? No, I've gotten my 10%, but my 10% is looking different because of the amount I have, right? So like what you've said, managing the expectation. But then, excuse me, coming into
saving
like saving and investing, you're looking at interest rates, like the differences to start with. If you're looking at a savings account, most likely they'll give you like maybe 1% to 4%. I've noticed most accounts in Zambia right now are like 4% per annum. But with investments, we have ranges depending on what you're investing in. It's a wide range, but it could maybe vary from 6% to like 25% per annum, somewhere there. One thing is that even savings accounts, people know fixed deposits, right? Where you're putting your money for a particular period. So, if I put my money today, I can't just go tomorrow and say I want my money back. But in most cases with savings accounts, you can be contributing continuously to your account and then you get some, I don't know, like you're able to withdraw maybe once or twice or whatever. With an investment, you will understand that they'll tell you, oh, maybe there's a lock-in period. Maybe you need to put this money aside for a year or for 5
Yeah.
years, even 15 years, depending on what
Yes,
you
which
pick,
one?
right?
Yeah.
Yes. So the expectation is there. I've seen people also try to, I say, like, crown saving. They crown it like with the investing expectations. With saving, you're putting aside money. Maybe you want to buy something like a vehicle, or you're just keeping money in case my baby needs something, and at that point I don't have any money. I'll go use my savings account. There are things we say like sinking funds. That's where I just saving down on something you plan to do. It could be a vacation. It could be just like, oh, when my car needs servicing, and then so it's usually short term in most cases. But with investing, you're thinking long term. You're
Yeah.
thinking when I retire, you're thinking a better education. You're thinking maybe you want to take a sabbatical for some time, like stop working for 2 years and just travel the world.
Yeah.
And or like bigger things, obviously. It could be up to
Yes.
you. So investing is different in the sense that, one, even the risks will be higher because, one, you are also expecting higher interest rates, like I mentioned, versus the saving. But then you cannot say I'll just invest, because what if tomorrow you need the money to buy new tires because something has
Yeah.
happened to your tire?
Yeah.
That's where saving
Yeah.
saving money comes in. So that's like the difference.
Yeah.
The period, one is short term, the other one is
Is
longer
long
term.
term.
Your goals, the other one is for like your immediate goals or the smaller goals. And also accessibility. With the saving
Yeah.
is more like it's easy, you can easily liquidate. With investing, you'll find that in most cases liquidating is not as easy. Like, you maybe need to wait for a certain period for certain things, and some you can't even liquidate until they reach maturity.
Yeah.
So that type of thing. Those are some of the differences, basically.
Okay.
Yeah.
I hope it's clear to
I also hope
our
so.
viewers, because people get these things mixed up, and sometimes people will come to you with a saving idea and they're
Yes.
thinking it's an
Invest.
investment.
Yeah, invest.
So they'll come to you and they'll be like, ah, this bank account, it's only giving me
Yeah, I see
2%,
people
but I'm
complaining. I'm like,
investing in
what?
it. I'm
That's
like, what do
good.
you
You
mean?
can withdraw your money using that interest.
And sometimes people forget that business is also an investment. So
Yes.
nowadays, it's like when people are talking investment, they're thinking it's only the capital markets.
Thank
And that's
you.
what makes them start to think, but this one is only giving this return.
Yeah.
So even if you are going to do a business, you should also do your research about
Yes.
the returns in that field. Don't
And
just
yeah.
go in
And
because
the what? The period, like the
yes,
expectation you have. Even businesses, you see,
even
someone just
businesses.
starts and they want to. No, you will
Yes,
see the statistics. You to take you 3 to 5 years.
most businesses are
Yeah.
loss making, or they just
Mm-hmm.
break even the first 5 years. But what
Yeah.
happens these days is you go in a business and you're expecting a return from
A
month
very
one.
high return.
Yes.
Yeah, and that's why
So
people are
each
preaching it over.
expectation,
Yeah.
yeah, we really need to manage our expectations.
Mm-hmm.
So what role does risk tolerance play in our investment journey?
Yeah. So risk tolerance will protect you. Honestly, that's what I would say. The first thing is it will
Yeah.
protect you. If daily you're like high risk in the sense that you are willing to put money into something. Of course, you've understood it, but you're like, even if I lose it, I'm going to focus on the fact that I could earn more.
Yeah.
But if I lose it, I'll accept that it has happened, right?
Yeah.
In that sense, you will be you're protected because you will probably be investing in other things as well to balance that risk, right? But if someone, maybe me as Chipepo, I'm low risk, which I am actually, in a way, like
Yeah.
I'm not the person who will say, I have this money, let me pump all of it in investing. You are not going, or rather in a high risk investment. And then I'll cry because for me, my expectations were that I need to get my capital back. And aside that, I need to make the interest. So you'll find that when they say putting all your eggs in one basket,
Yeah.
most people who don't understand the risk levels they are at, they'll put their eggs in a basket
Yeah.
that they don't know could break and everything in there could fall out, and now they'll cry. But you come across someone who knew the risk they were going into, they'll be like, oh, yeah, no, it's fine. This happens.
Yes.
They go on to the next thing. So
Yeah.
that's the importance of just understanding your risk
The risk tolerance.
appetite, tolerance, and like really what you can take on, what you cannot take on, but also how you can balance. Because even if I've said I prefer to be like on the medium low
Yeah.
side, I still balance. I still put money in things that are on the higher risk side. I
Yeah.
just don't, like, let's say 70% of my money goes into
In the
that,
high risk.
and then no, like I do it in a way that it balances out.
You need to have a good mix.
Yeah.
You mentioned something earlier when you were talking about a young person being able to have more room to like invest in certain investment versus someone who's like 76.
Yeah.
And that is because of compound interest. So for those who don't understand that concept, what really is compound interest and how can we benefit from just utilizing that opportunity where it is to use compounding effect?
Yeah. So it's like, it's one of my favorite things. Like when I understood the whole thing, I
Yeah.
remember going like on the internet, checking different calculators. They're actually compound interest calculators that you can find online. Of course, most of them will not have our currency, but just think of it like in kwacha terms. Someone asked me like, do I convert? I'm like, no, just look at the number and put a K. Yeah.
Yes.
Anyway, so basically the concept which applies in a lot of things in life is that if we're talking about money, your initial money invested or saved will be growing, and whatever interest is being applied to that, when you earn on it, that will also continue growing. So an example I can give is, let's say you have 100 kwacha, you are 16 years old, very young, and you say, I'm going to start investing in something that will be returning me maybe 20% per annum. So it means your 100 kwacha will earn 20%.
Yes.
And the next time they're applying that interest on your money, it will be on the entire 120. It won't only be on that 100 or just that 20 kwacha that you earned. And the next time they apply that interest, it will be on the whole thing, just like that. So your initial invested money or your initial saved money and the interest you continue to earn continues to grow. So it's like a spiral effect now. It's just like snowballing. It's just growing and growing and growing because everything is gaining. If you're thinking about it for certain things, or rather, if we're looking at it like you come across comparisons, like if someone invested for 30 years and someone who invested for 20 years, you find the one who invested for 20 years has more money, like let's say at retirement, right? What they're saying is that if I start at 20, if you look at that effect in the 10-year period, even if someone started when I'm 30, like 10 years later, they will need to pump in more for them to be able to catch up with me. Because for me, the money I was contributing in the last 10 years continued to grow with the money I contributed at the very beginning. So you see that when you compare them, you who's starting now, you will need to put in more for that. If it will still work even on you, the same compound effect, but it's a concept of time. Like it needs time, whether it's daily compounding, weekly compounding, monthly compounding, or yearly compounding. At the end of the day, it's about time. So the longer your money stays in the game, the more you will earn, or the more that money will grow.
Yeah, that's very true. And so that's why it's important to just start now.
Yes, your now
no
is
matter how
different, but
much the
now.
amount is.
Yes.
Because they say time in the market is
Versus
better than timing the market. So some people are waiting to say this 100,000, when are the rates going to be above 30%?
Yeah, and I've seen things turn different.
Yes, so you are better off starting where you are with that 100 kwacha. Start investing it so that it grows, because you have the advantage of time versus a millionaire who wakes up now and like look at how it is today. I know some people who invested in certain companies in the stock market many years ago with a small amount of money, but those shares have really grown, the capital gains. But now you look at someone waking up today and wanting to buy that share. Maybe that person who bought 10 years ago bought a share at 4 kwacha. Now certain companies are trading one share at 50 kwacha. So you come here, you buy at 50 kwacha. But those people bought with less money, and now the value of that capital is so high. So I think that's why people really need to understand this concept. And it's not as complicated as people think it is.
It's not at all. In teaching, we use examples like if you had your first tree, fruit tree, maybe a mango tree, you plant it, the comparison would be that maybe you plant it, you have fruits, you eat everything, so you wait for until the next season, you only have that one tree. But compounding in that case will be like the first time it gives you fruit, you get some of the seeds, you plant them. So the next season, the mother plant is giving you fruits and the baby plants are giving you fruit. Same thing, you get more fruits, plant them. So you can imagine someone who stayed with that one tree, always waiting for it to fruit, versus the one who kept on expanding. Their farm would be obviously big, right? So think of that now as your money growing that way. Those who are in livestock, I think they understand this concept a lot. Like, especially small scale farmers, like they'll say, no, we're just starting with maybe 5 female, whatever, and 1 male. Because they know that once those start reproducing, the numbers will continue to increase. So yeah, it's really not complicated. Don't be scared of it.
I love how you put it, and that example just makes it even simpler for anyone to be able to understand. So don't be scared when you hear compound interest calculator. Just think about the mango illustration that she's given us. Okay, and for someone that is hearing words like my investment portfolio, my investment mix, how do you start with making like an investment plan that just aligns with your financial goals?
Okay. Well, obviously you have to start with knowing your financial goals. So you said something great, which is like just that now, right? So your now will be different. Some people will come and be like, but you people, you started investing in 2020, things were what? Like, no, your now is, can you imagine someone who will come now 5 years from now? They'll also be admiring you. They'll be looking at you and saying, wow, 5 years ago, this is good. So just start in your now. But in starting, you have to establish the goals, right? So identify what your goals really are. What are you working towards? What do you really want? Because then now you can make a financial plan around those goals. Because the financial plan will just be a roadmap that allows you to achieve those things. So you say, okay, you want to be a millionaire, or you want to retire with 3 million in your investment portfolio, as we put it. Meaning the value of your assets, whatever you would have invested in, should be at 3 million. Or maybe you say you have a goal to be able to, the money that you're earning now from your work, your investments should be able to give you that. So that, like, creating a financial plan now will be you saying, that's my destination, but how do I get to that destination? So now you start learning the different things and seeing what they can return you for you to be able to get to that number.
Okay. I think that makes it simple. And what is there any particular book or resource or podcast that you would recommend to someone just to learn?
Generally, like personal finance.
Yes.
Okay. So for me, I don't even. Okay, so I don't read books from page 1 to the last page nowadays on personal finance, because it's been like so many years of just reading articles, reading books and everything. And from what I've seen, The Richest Man in Babylon for me is that book. Because a lot of concepts are stemming from there. Like most personal finance books that are created, they are coming from there. And the beauty about things that have happened like for years and years is that the changes that happen will just be like, oh, now we are living in these times, but the concept of money remains the same. The principles remain the same. So Richest Man in Babylon is a good start. But if you maybe don't like the style of reading, there are a lot of new books that are on the market now, and they may speak to your generation. So I always say that just go to Google and say maybe top 5 personal finance books. There's a reason that they'll come up as top 5. And from there, maybe pick out 2 or 3 and read them and see how you feel about that. And depending on your angle, because I've seen certain people will be like, no, I prefer this book because for me, I'm this way, or I love real estate, or I love what. But they'll teach you about personal finance and maybe dig deep into something. And if you're in Africa, maybe you're saying, I want to read books by Africans, right? So you could search what are the top 5 personal finance books in Africa. See what comes up. So I would recommend Nicolette Mashile. She's South African. She's got a book as well, but also has a podcast that you can listen to on any podcast listening platform or on her YouTube channel. And then also I would say that right now we are in the age of podcasts. So
Yes.
some of the books that you may not understand on your own, you can find a podcast where they've broken it down. Or what I like doing is when I come across a book, I'll look at the author, search for them, see all the interviews they've done. I would have grasped the concepts they're trying to teach me.
Yeah.
And then now, if I want, I can still go and get the book just for deeper understanding. Because obviously, reading is different from things being broken down in smaller chunks. So those are some like of the resources. Psychology of money is one I've seen a lot of people talking about. I've only done podcasts on it, like listen to podcasts. I haven't read the book, but I know it's good as well.
Okay. Yeah, no, there are a lot of good resources out there. And like you have said, I mean, just a Google search can lead you to those gems. You don't need, because also people have preferences. So some people may read this book, others read Napoleon Hill, others, they only want this author.
I'm a Jim Rohn fanatic. I love his old videos and audios, and I listen to those a lot. So yeah.
Rich Dad, Poor Dad.
Exactly.
Dave Ramsey.
Yeah, like there's so many. And the thing is with researching or with Google itself, you feel like maybe there's too much that you're being shown. That's why I said narrow it down. Don't just say personal finance books. They'll show you hundreds and hundreds, and you'll be like, oh,
and
I don't
get
know.
Confused. Okay. So what's one simple action that you think people watching can take to just improve their financial future today? Learning.
Yeah.
And that's the first thing that you talked about.
Learning. And then not ending there, taking action. So I know you've said what's the first, but like you cannot take action on something you don't understand. And I say that with a grain of salt because I know that there are people who would take action on things they don't understand.
Yeah.
And maybe 1 out of 10 succeed, but most people crash. Then they now cry or spread false information. You will see, no, these things are not even good because they went into it without learning. So learn, understand, take action on what aligns with you. Yeah.
Okay, great. And how can our audience find you and learn more about your work in conclusion?
Well, they can find me on social media, on Facebook mainly, and on Instagram as well.
Yeah.
But you can also find us on LinkedIn. I say us because, guys, I'm not managing all those things. Yeah, but you can find, I say Facebook and Instagram first because that's where we are more active. And I started with those platforms. So there's like a whole archive of information. You just scroll through and you have so much, like maybe for 3 months or something, you're just going through content. So yeah, those two platforms. And
do you also do classes?
I do classes, yes. So you can find that information there at Finances with Chipepo. It's the same everywhere, unless someone is imitating me, but no. Finances with S and then with Chipepo.
Okay, cool. We'll try and put your links in our description for this video.
Sure.
So, Chipepo, thank you so much for coming on the show and sharing a bit about money mindset and investing for beginners.
Thank you so much, Talia. Thank you for having me. I've enjoyed being on Money with People, or Money and People.
Yeah, and we look forward to having you. Maybe next time we go deeper and just dissect investments even more.
Yeah.
And to you, our audience, thank you so much for staying and watching till the end. And if you didn't like already, please remember to like and subscribe to our YouTube channel. We'll see you in the next episode. Bye.